In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto.
Question everything, trust nothing. It's your boy, BlockchainCrusader here again from Debate Crypto. Guys, it's Fun Fact Friday. Get ready. We got some crazy good information for you guys. You know, CPI numbers came out. Inflation is higher than ever. But is it? Right? I've got some information for you about it. We're going to be talking about Janet Yellen and, investing in Bitcoin as a 401k investment strategy might be a little bit too risky. We've also got Mastercard getting involved with Sandbox and NFTs. We've got Solana NFT platform Fractal aiming to work with Google to make things a little bit easier for users. And we're going to obviously close it out with the Bitcoin and Ethereum crash due to inflation and the inflation numbers coming out today. So, guys, if you haven't smashed the likes, smash the like. And let's get ready, guys. Let's jump into this. Let's jump into the market overwatch here and see where things are at currently with the market. So here we go. Let's just get right into it. So prices, man, prices. Very, very tricky, these little prices, huh? Bear markets, who would have thought bear markets would be so tricky? So we're down 3%, 3.4% on the total market cap for cryptocurrencies. We're down to $1.19 trillion. Bitcoin's down at 29.1. We've been dropping since 30. And we've dropped 3% today. Ethereum's dropped 6.7% today, down in the 1600s, guys, down in the 1600s. Could we drop lower? How low can it go? That is the question. Stable coins doing their thing. BNB down 1%. Cardano down 8% today, even though it's up 12% on the 30 days. So, not terrible, but, 8% in one day. Yikes. XRP down 4%. Solana down another 6%. Dogecoin, Polkadot 4%. Everything's dropping. Avalanche 7%. Chainlink down 11% with 18% pump from the Chainlink news about it being able to be staked coming out. But yeah, things are down, guys. As Bitcoin drops due to this, situation with the FUD of inflation and CPI numbers, obviously the altcoins are going to feel the pain more than Bitcoin does. So Bitcoin drops a little bit, altcoins are going to double or triple those numbers. It's the bear market. So wherever Bitcoin goes, the altcoin follows. I don't expect any altcoin season happening anytime soon. So let's jump into the fear and greed index. How fearful is the market? Yeah, Michael, I'm flying solo, man. I'm flying solo all week, all the way up until possibly next Tuesday. Nick is out. CryptoKeeper is out at Texas right now in consensus. So he's out there representing Debate Crypto and living it up, right? Living the good life. I'm out here working, working like the slave that I am. But all jokes aside, he's out there working, representing, making the show better, making connections. So, all appreciated, all good and fun here. So, fear and greed index, we're at a 13, guys. Yesterday, we were at an 11. Last week, we were at a 10. Last month, we were at a 12. So, we're at an extreme fear, guys. We are at extreme fear. The next update comes out in 22 minutes, about right when this show will end. So, expect it to be fearful nonetheless. Fearful nonetheless. And let's look at the charts here. Let's also look at the charts, see what is happening with Bitcoin's price. I know yesterday was TA Thursday with leading crypto, aka Magic Internet Money and CVO. So shout out to them. If you haven't seen them, go check out yesterday's episode and go follow them on the Instagrams, the Twitters, the YouTubes, and the TikTokies. So as you can see here, right, this point of control, this volume control right here, this POC, you see that it's almost like a line, right? If you continue to draw this out, it's going to hit this heart line from the regression trend. And as you can see, we've had two fake outs to breaking out above it, and we've broken back down. So it's almost like an ascending triangle. Sorry, not an ascending triangle. A continuation pattern here, because it forms a triangle right here, right? So these triangles, if as a continuation pattern, if you go into a bearish, you're more likely going to break out of it bearish as well. So this is no bueno, right? No bueno at all. You don't want to be seeing this even, and then it looks like you're almost creating like a little mini double top situation right here. And if we break this price, which we kind of are already, it's almost like the neckline of this double top, and as well as the triangle, and we can continue going down. The next big level of support is at 26,915. So are we gonna go there lower? Are we gonna go there? I don't know, man. But things are looking bearish, right? Things are not looking very good. Things are looking very weak. RSI, obviously is oversold, or reaching oversold territories. Market cipher here, the flow of money not flowing into Bitcoin, right? Momentum wave, small momentum wave coming down. The VWAP also coming down. So not looking too great. Not looking too great at all here, guys. But it's not all doom and gloom, right? It's the bear market. This is where the money is made, guys. This is where the wealth, the life-changing money is made in these bear markets. Not at the bull markets, it's in the bear markets, guys. So let's move in here to our first article before we get into the whole Bitcoin and inflation numbers. Let's get into some of the things that are happening with Mastercard. So Mastercard making some moves into the crypto NFT space. So here we go, guys. Mastercard adds the sandbox nifty gateway mintable to simple NFT purchase scheme. So basically, they're allowing you to be able to buy buy these NFTs with their Mastercard. So the payment giant Mastercard is working with a host of NFT marketplaces to make it easier for people to buy digital art. So you're going to be able to cha-ching, 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 swipe your credit card, go into massive debt, max those babies out to scoop up all the NFTs that you possibly can, and hope that they, at least 2x or 3x or 10x, or are the next Bored Ape Yacht Club. So this is what's happening, guys. They're literally letting you dig yourself into a deeper hole with your credit card. Swipe, 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 right? It's all about ease of usability. It's a lot more difficult for people to, have their own custody of their own wallet, send the money from an exchange to their MetaMask, connect their MetaMask to OpenSeas or whatever other platform, and buy an NFT that way. Now they're just saying, hey, swipe, swipe, swipe. And not only is it going to be easy, we're also going to be collecting that data. So Mastercard is not going to be collecting data, obviously, on how what you're purchasing, what NFTs are you purchasing, how deeply involved in cryptocurrencies are you. So the Mastercard has announced that it's teaming up with several non-fungible token marketplaces to bring its payments network to Web3. Everyone's making a pivot to Web3. If they're not, they're going to be left behind, guys. They're going to become the Sears and the Toys R Us of the 2000s. See you later, alligator. You got to catch up to the technologies. But with that being said, with these Web 2 companies, coming into Web 3 and, MasterCard and these old legacy payment systems, man, should have drank some water before going live. They're going to obviously use this to collect as much data from on-chain as possible. So we'll be diving deeper into that in the next article. So let's stay tuned for that. But here we go. So possible NFT purchases with debit and credit cards. Oh, sweet baby Jesus. The degens are going to eat this up. According to the blog post, the NFT marketplace partnering with MasterCard includes Immutable X, Candy Digital, The Sandbox, Mintable, Spring, and NFT Gateway, as well as Web3 infrastructure provider MoonPay. The integration will enable users to purchase NFTs in an easier and safer manner by using their card rather than crypto to complete the transaction. See, those are the key words right there, right? Those are the key words right there. Easier and safer. So they're literally saying, hey, don't worry about self-custody. Don't worry about using cryptocurrencies and being able to, make it more difficult for us to find out what it is that you're buying and what it is that you're doing by using all these burner wallets. Don't do that. Use our MasterCard. It's easier and safer. Don't worry about all those crazy MetaMask and self-custody issues that people have. You can get hacked and all this crap. They're going to sell you all the FUD, right, and give you the solution. We are an easier solution. We are safer. Use us so that we can collect all your data. Give me your data. That's what these people want, and that's what they're going to continue doing. So, not going to go deeper into that article. You already get it. Mastercard is allowing you to buy NFTs. You're going to swipe your credit card, go into massive debt, buy, and they're going to collect. And talking about collecting data, let's talk about what Solana is trying to do. A platform on Solana is trying to do here. So let's jump right into this because we're on fire tonight, guys. We are on fire tonight. Make sure you smash the likes. Make sure you blow up the chat, guys. Give me the energies to keep this show going solo. So here we are, guys. Solana NFT platform Fractal aims to simplify, once again, right? Web3 gaming with Google sign-in, guys. Google sign-in. Who wants to collect more data than Google itself, right? The master of data collection. So Justin Kang's crypto game marketplace, which has recently raised 35 million, that's cool, seeks to make it easier for NFT newcomers to start playing. Once again, easier. Simplify. You see all these buzzwords, all these keywords that they're trying to do? They're trying to prime you guys. They're trying to prime you. So here it is. In brief, the Fractal, a Solana-based NFT gaming marketplace, has added the ability to create a wallet using your Google account. Google account, guys. The masters of data mining. The move is designed to make it easier for players to enter the NFT game. Yes, convenience at the cost of freedom, at the cost of your data, at the cost of your privacy. Give me all the conveniences, baby. I mean, I understand, right? I get it. Making things easier is good, but why? Why, Lordy? Why, sweet baby Jesus, are we bending the knee to the ancestry system that we know is going to dig a hook into our back and split us the minute we are not looking, right? The minute we accept it, we're done. We're done. Web3 and cryptocurrencies were supposed to be about freedom. We're supposed to be about self-custody. It was supposed to be about transparency and privacy and all these other beautiful things, right? It was a cyber revolution. But as you can see, Google, Mastercard, and all these boys are coming to play. They're coming to town to make sure that they dig their hooks into it. They corner the market as soon as possible and start digging out all that data, right? They're going to be digging on the blockchain, baby. Digging on the blockchain all night long. So I'm not going to go too much deeper into this about Fractal and whatever. What I wanted to cover here was Google sign-in, making it easier to get into NFT platforms, gaming, Mastercard getting into doing the same thing. The information is going to be dug out, right? They're going to get you. They're going to make sure that any gains that you're making in your NFTs or whatever, they know exactly what NFTs you're buying. They know exactly what games you're playing on the blockchain. They're going to know everything more than they already know, right? They already know more than enough, but they're going to know every little bit more. There's no hiding on the blockchain, and especially when we start introducing these legacy systems to allow to dig information out of it, guys. It's cool, but it's a double-edged sword, right? Double-edged sword. Have you seen that on TikTok? The trend, double-edged sword. Convenience, but at the cost of freedom and your privacy and your data. But let's move on, guys. Let's move on to the inflation. Before we get into the inflation, by the way, drop a 1 if you think inflation really is at 8.6% only. Drop a 1 if you think that's true. If you think that is fugazi, drop a 2 in the chat, guys. Drop a 2 in the chat. Let's blow it up. But first, before we get into the inflation numbers and Bitcoin taking a crash, taking a nice little dip, right? We're going to talk about Janet Yellen and her thoughts on using Bitcoin to save money. So let's get into that real quick. Here we are. Good old Janet Yellen. Here we are, guys. Here we are. So, Treasuries, Janet Yellen, Bitcoins, very risky option for retirement savings. Oh, no, no, no. The Treasury Secretary said that funds holding crypto are not something that I would recommend to people saving for retirement. No, I would recommend using stocks, highly manipulated market controlled by us because we are the solution. We are the government and we are here to help you. Don't do this Bitcoin thing that gives freedom and especially financial freedom and continues to outperform everything else. Don't do that. That's risky. That's bad. Let us accumulate it. Let us control it. And then once all that is done, we will sell it back to you because then it will be safe. Oh wait, that's not on the article. Let me continue on the article. Sorry. The Treasury Secretary Janet Yellen on Thursday warned the people against including Bitcoin and other cryptocurrencies in retirement plans. Oh, sweet baby Jesus, don't take on all that risk, guys. Trust the stock market, the good old stock market, calling them a very risky investment. Yellen's comments came at a New York Times event in Washington in response to a question about Fidelity's April announcement that it will let workers save up to 20% of their retirement funds in Bitcoin. It's not something I would recommend to most people who are saving for their retirement, she said. To me, it's a very risky investment. Guys, let me accumulate these words. How is accumulating Bitcoin for the long-term retirement funds like a 401k, right? Risky. That's literally the least riskiest thing to do in cryptocurrencies. Bitcoin's the least risk asset in all of crypto. And if you're talking about long-term, you're talking about retirement plans, you're talking about 401k statuses where people literally put money into their 401ks for over 20 years until they retire. You're telling me that is a risky asset? Come on now. Obviously, nothing I'm saying here is financial advice. And I don't expect you guys to take it like financial advice, but I always got to say it just in case. It's just these are my personal thoughts about how Bitcoin works and what Bitcoin's future is going to look like. So it's not something that I would recommend to most people who are saving for the. I already read that. Whatever. The U.S. Labor Department has previously signaled its opposition to Fidelity's allowing Bitcoin in retirement accounts. It's about to get juicy in here, guys. Saying it had grave concerns over the decision, but House Republicans last month sought to protect the option with a bill that will prevent a federal ban on crypto retirement savings. Well, we'll see what that bill looks like when it's finally done, right? When they've added a bunch of fugazi into the bill that's made it like over 1,000 pages long, and it's the least amount that's in the bill is even about cryptocurrencies. But we will see. At the event on Thursday, Yellen went on to say that she thought it would be legitimate if Congress decided to apply rules to those retirement plans that are granted favorable tax terms. Oh, wait, you can't accumulate Bitcoin and have favorable tax terms on your savings. No. You might make too much money. But remember, it's extremely risky. The tax laws have created the opportunity to save in tax advantage ways. She said, if Congress wanted to get involved in legislating in this area and say, we've given tax incentives to 401ks and retirement plans, and we want to regulate what form that savings can take, to my mind, that would be legitimate. I'm not saying I recommend it. So they want you to save, but only if they can regulate it to be in a certain form that they are interested in, not in however you want. So I'm not going to keep going on here. Tomatoes, potatoes, always talking massive trash about crypto and, how it's too risky, how don't do it. It's the most frustrating thing in the world to hear. It's the most frustrating. And the most frustrating thing is that there's tons of people out there that believe this lady and they believe what these people are saying. and they don't do any research about cryptocurrencies. They don't do any research about Bitcoin, just Bitcoin alone. They don't do any research. They have no understanding of cryptocurrencies or Bitcoin, and they believe this nonsense. They believe this nonsense, guys. So, guys, if you haven't smashed the likes, smash the likes. If you haven't joined Danger Close Alpha, it's been popping. Last night we had a crazy, awesome turnout at the Twitter space. We then had an after party in the Discord inside our voice channel. So that was awesome. Earlier today, it was also popping in the Discord. We were talking about a bunch of different things from urban combat and basics and how to set up your pack to some trading that we were doing, some great advice that we were getting. We were getting advice from one of our members on how to grow potatoes in a vertical form to save space and how easy it could be. So tons of information, tons of community being built here with different people having different skills, different knowledge already to be shared among each other. So it's been popping in the voice channel inside the Discord. Make sure you join Danger Close Alpha. If you know, you know. But here we go, guys. Let's jump into the final article about Bitcoin, CPI, the inflation numbers, and why it's been dumping. So let's get into this, guys. Let's get into it. Here we go. Are you ready? Are you ready? So here we are. Bitcoin, Ethereum tumble as CPI report points to the rising inflation. Inflation rebounded in May after April slowdown. Surprise, surprise. Impacting on a crypto market increasingly correlated with tech stocks. Unfortunately, that's the agenda now. Inflation accelerated again in May after slowing down in April, which could have a negative impact on cryptocurrency markets. Already reeling from the Federal Reserve's tighter monetary policy. The Consumer Price Index, CPI, rose 8.6% in the 12 months through May, which is the largest 12-month increase since December of 1981, the Bureau of Labor Statistics reported Friday. The largest monthly gains for CPI, an index that tracks price movements across a broad range of goods and services, came from the shelter, food, and gasoline. After dipping in April, the energy index climbed 3.9% on a month-to-month basis. The index for electricity increased by 1.3% in May, indicating the price of electricity has increased by 12% within the past year, which will raise the cost of cryptocurrency mining. The CPI of all data rises 1% in May. Shelter, gasoline, food indexes rise. So those are the statistics from the Bureau of Labor. The higher cost of energy is going to make mining more expensive. Oh no, less profitable business, said Jason Schenecker. I don't know how to say that. Chief economist at Prestige Economics. As for crypto in general, if you see people going in more defensive assets, that's not something I think would be favorable. I think would favor crypto as well. Okay. If the Fed grows more aggressive in raising interest rates, that could further co-opt institutional investors out of the cryptocurrencies. Man, I need water. I am dried out here. I need some water. Cryptocurrency markets, as they seek less volatile investments in treasuries and bonds, a sell-off would be bad for the prices of most digital assets. Well, a sell-off would be bad for any market. No shit. So today, the broader crypto market took a hit around the same time as the BLS report released. Bitcoin is down 4.2%. Ethereum is down over 7% over the past 24 hours. Other cryptocurrencies were hit harder. Obviously, we already went over that. We've already seen institutional investing slowing down, and the trend is likely to continue, said Lucas. Well, these people's last names are crazy. Head of research at Into the Block, a data science company specializing in crypto markets. Bitcoin has not been an effective inflation hedge thus far. That's the narrative, right? Bad for inflation hedge. Bad for inflation hedge. But the Nasdaq and S&P also took a hit today too. So, like I said right here, today's price action shows Bitcoin dropping less than the Nasdaq and S&P. So, if this trend continues, then institutions may reassess their stance. Thank you for some truth in this article. Thank you, thank you, thank you. Inflation is forcing households to be more conscientious about how they spend their money, and it especially impacts those with less income. No, no, of course, right? But I've got some more numbers for you guys. If you guys, the summer's coming up, people like to grill, people like to barbecue, and I've got some numbers for you guys if you're into grilling like I am. I'm into grilling. I love cooking steaks. I love cooking meat. I'm definitely not a vegan's best friend. So, beef and veal up 10.2%. Ground beef up 13.6%. Beef steaks up 6.6%. Pork is up 13.3%. Pork chops up 11%. Hot dogs up 10.4%. Bacon, breakfast sausages up 15.6%. Chicken up 17.4%. And let me see. We got over here most costly as well. Propane and firewood grew a whopping 28%. 28%, guys. And that's not to include, obviously, gas and, electricity and all these things. We're seeing gas at over $6 now. And they're telling us that it's only 8.6% CPI numbers are only 8. The lies inflate faster than the inflation that's happening, right? The lies inflate faster than that. Guys, it is wild what is happening in this world. It is happening. It's wild what's happening. People are talking about stagflation becoming a reality, which is one of the worst case scenarios. That's when the economy shrinks and at the same time there's high inflation. And that last time that happened was sometime in the 70s, and it was not good. It's almost worse than a depression. It's really it's kind of like getting your car stuck in mud and you're just spinning your wheels. You're not gonna get out anytime soon. So we got here. Crypto Billy says gas is $6.70 here in San Francisco, California. I'm surprised it's that low. I thought it'd be at $9 by now. Keaton says I bought gas in San Francisco last month at $6.29. That's a huge increase. Yeah, I was buying gas here in Miami, Florida, at around $4.50-ish. Now we're over $5. And it's getting crazy. It's getting crazy. I saw a place that was literally $5.99, basically $6. Basically $6. Things are only going to get worse. And that is why we're trying to prepare for Danger Close Alpha. This NFT project is about a movement to help people prepare, gain the resources, gain the skills they need to make sure that they can weather the storm of no matter what it is, whether it's inflation, stagnation, natural disasters, all the way to government tyranny. That's what this project is about. Make sure you're joining the Discord. Make sure you're being part of this movement because unlike the crypto markets, you're not always going to be early. The time will come and you will be late. And if you're late to the party, there's nothing but regrets after that. And I'm not talking about the NFT party. I'm not talking about the Danger Close Alpha party. I'm talking about the party. So if you know, you know, guys. I hope you guys enjoyed the show. And I keep bringing you guys the best content possible here in Debate Crypto. A lot of things are going on. Obviously, we got the NFT project. We got the show. We've got we're somewhat traveling to these conferences to make sure that we're having a presence at all these conferences. So lots of different things are happening here at Debate Crypto. Things are going to continue to keep growing at accelerated pace, faster than inflation. So smash the likes, share out the live with your friend. Make sure you join the Discord. Make sure you are part of this movement, guys. And let's freaking go. It's Friday. Everyone have a happy weekend. Be safe out there. And like always, question everything, trust nothing. And until next time, hodl like it's hot.